Access to this webinar is for educational informational purposes only. Consult a licensed broker, registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker dealers. Nothing contained in this webinar, website, two, three. Hello? Wait a minute, did that fix it? I just turned the audio on and off. Did that happen to work? I'm gonna give it about 10 seconds, I'll give it 15 seconds, see if anybody responds. But I rebooted basically just the audio to see if that would help. Sound is back. Okay. Hey, I figured it out. You guys probably can't see the control panel, but I turned the audio off and turned it back on. Haha. Yay. Amazing. All right. Phil Davis with the technical support. All right. What were we doing? Oh, I didn't shut off Thinkorswim now, did I? Son of a. Because I was about to reboot, so I shut Thinkorswim down. And I said, hey, what if I check this? All right, let's try that again. Thinkorswim. Because I wonder if that's what broke the audio before. Hold on a minute. Let's see if that gets up and running. Can you hear me now? Yeah, you should be able to hear me now. All right, and testing the audio, and everything looks like it's working on my end. Is it? Yeah, sure. Okay, I'm moving my mouse around. You guys should be able to see that. Oh, now we're getting Thinkorswim up. All right, finally we're on track. Okay. And where are we? All right, good. I'm going to go ahead, assuming everybody can hear now. We've got, let's look at this chart. It is an ugly, ugly day at the moment. YM, and we'll go back and, so basically we're down from 25.6 to 24.9, so down almost 700 points in 2 days. That is not good, obviously. We're bouncing now, and we just called it. In fact, we just called it. Here we are, exactly where I just said we would bounce to. Is 75-point bounce is what we expected off 25,000. So we're good for that. So at this point now, if you guys played that, see how you're hitting that green line? Very likely we're going to pause there, and if we don't pause there, we should be good all the way up to 150 points, all the way back up to here. So. You know, you just want to watch this line very closely. 75 points in that amount of time is good profit. So it's $375 in profit from that little thing. So I wouldn't be too greedy about it. It's silly. You know, you could flip to 2780 over here and take that for long, or you can wait, or you can pick up 1490 over here for long. You don't have to stick with the Dow. You know, if everybody's going up, then probably the lagging one is going to be the Russell at the moment. And but now we're well over, so there was no stop out, so you can just hang on to it and see how it goes. Look at oil blasting higher. What the hell happened to oil? Texas went flying up. Brent is lagging, which is odd. Gasoline is lagging, so that becomes a nice long. In fact, I like gasoline here, so let's grab that one. we just never quit on gasoline, do we? Because we're always jumping back into it. The July, I'm still on the July contracts. We'll see if we can find the right price for it. It's way down here at 191, not even 191 yet. So if oil is flying back up, then gasoline shouldn't be too far behind. So let's give it a chance and pick up one contract long on gasoline. And of course, it doesn't fill. Oh, there it goes. Okay. So basically, once we get over 191, 191 will be our stop on that one. And let's see what else looks interesting. And now we're well over. So now definitely at this point, 25.075 is your stop. And once you get over 25.1, 25.1 becomes your stop, and then you can let it ride to 50. So anyway, so I don't know what happened. I don't know what turned this around at 57, but 57 was stupidly cheap anyway. I wish I was paying more attention to gasoline, but we were busy. But anyway, so, nice sell-off. Trump's, Mueller says, look, Mueller didn't say anything different. Mueller just said what was in the report. He said, if Trump was not guilty, I would have said so, is the way Mueller put it. So in other words, the president is guilty of stuff, and so what? But he said, and Mueller also said you can't indict a sitting president. Therefore, there's no action to be taken. It's up to Congress. The only thing he could do is turn his report over to Congress, and it's up to them to decide whether to impeach the president or not, based on illegal options for which your president cannot be, illegal actions for which your president can't be indicted. So everything we've had selling off since here is really bonus sell-off based on what Mueller said, and that's not going to last because he didn't say anything that we didn't already know. So we're still waiting to see if we can get back to 2,800 by the end of the day. If we hold that line, that's kind of critical, and we'll see what happens. Jal says, double tap on square to enlarge your screen. What screen? You mean that one? That's not going to get any bigger. It's as big as it's getting right now. Unless he's talking to somebody else. I don't know. Anyway, all right, picking up side conversations there. All right, so where were we? So we took the one long gasoline because I still think, it's the same premise we had last week. We still think it's going to pop back up, and we're back at 190. We're back here at 193, and we should certainly be seeing $2. So I'm pretty confident we have a whole month on this contract, so I like it long. You have to take any sell off like that to be a gift that you can just jump back in and do it again. And the dollar is super strong also, so hopefully, if the dollar pulls back, it's going to help the commodities. Silver's up to 1440, gold is up to 1287. See, he stalled out right at 100. So there you go. So we're done with that trade. So it's done with the trade with 100 points. It's $500. So it's a really quick $500. So that's no big deal. I don't know what made, we don't know we know what made it go down. You don't know what made it go up, and you just have to say, well, if you don't know, just screw it. Just take the quick money and get the hell out. Let's see if anything's exciting in the news before we move on to other stuff. Frackers, European Advisory, Brookfield, Exxon, there's nothing here. CBS declares a dividend, who cares? SBT, Bain is raising some money. Neo hits. Look at this, Bain's raising $1 billion. We are raising, PSW Investments is raising $100 million. We're not too far from getting onto these reports. You know what? A couple of years from now, it's going to be, say, PSW Investments over here, because it's like if $1 billion is going to get their attention, we are going to move in that direction in the not too distant future. I just had some really serious conversations with $100 million people for the new marijuana hedge fund we're setting up. It's very exciting. J&J down 6% on Oklahoma opioid litigation. Yeah, they're getting slammed. All these opioid companies, all of them, and Teva, and all these companies that sold opioids, they're going to be getting, it's going to be like the tobacco industry. They're going to get their asses sued off, but the margins of these drug companies aren't as good as the tobacco companies. So they don't really have the money. They're not going to recover like tobacco companies did. It's going to be very nasty for them. Canadian, now see, this is funny. Canadian Solar gets the biggest ever solar panel deal, but their stock goes down. They're doing okay though, so they've had about a year. But I mean, it's so silly how people don't give enough respect to these solar companies. Vegas Strip revenue falls 4% in April. Wow, that's nasty. Well, what do they mean by that? During the month, blah blah blah. Slot games, tables. I mean, there's less day. There's one less day. There's 3% less just by days alone. If there's one less day, that's 3%. So I don't know if they take that into account or not. Probably not, though. Because they're saying revenue fell 1.8% in April. So you always have to think of that stuff when you see figures, because you say compared to what, and what do they take into account? Wow. 12 months, 3 months, current month. Yeah, see, they're doing month-to-month comparisons. They're not taking into account how many days are in a month or where the holidays fall or any of that stuff. And you get that with retail also. You have to be always wondering, when you see up and down 3%, you got to say to yourself, what about if that's like just a day that was, there's one less day in April than there was in March? And then May has 31 days too, so April's always going to look bad compared to those surrounding months. All right, well, interesting though that may be to me. I had a friend who used to be in charge of Caesar's numbers, and I used to love reading all those spreadsheets and seeing all the wins, the machine wins, what people were playing, where the money was going. I used to love that. My favorite thing to look at. It's just it's like you can see the money flowing. It's so cool and see how it's getting made. Let's see, Dick's Sporting Goods. Wow, really? Dick's for tariffs? Come on. I think people take some of this stuff a little bit too seriously. Cyprus, we used to like Cyprus. Triple Point, Algeria, and darker. This is nothing. There's no news that should be moving the market the way it's moving. But it's been like that all month, really. It's been yanked up and down constantly. We talked about that a little bit yesterday in the chat room. So this is just more. The madness continues is all we could really say about that. And we'll see how oil hangs out. Gasoline's moving up a little bit, so we're in good shape here. Natural gas still flying. Okay, what else is going on? We got that, we got that, we got that. So what I mostly wanted to do today, being that we're having a crappy day. Now, let's talk about the portfolios. The hedges in our portfolios are not necessarily, they're expecting to protect us from 10% sell-off, but 20% sell-off is too much. And also, the way we make the big money on our hedges is because we then hedge our hedges. So in other words, right now, the SQQQ 32 calls, we used to have 100 of the $8 calls. Now we have 25 of the 32 calls, but it's basically the same thing. But they're up, 60%. So, they're, so we have a $15,000 victory here, but it's not going to stick if it goes the other way. So what we generally do with a trade like this is in preparation. This one doesn't happen to have any hedges, because what happened is when they did the reverse split, we had previously sold I want to say we sold, they wouldn't be the 15s, it was like the 25s. We had sold the short $25 calls. There are no short $100 calls in SQQQ, so we couldn't convert it, and therefore we just basically ended up buying it back. SQQQ. See, the problem is we had very high up hedges, and the new hedges, the new 2021s only go up to 60. So 25 times 4 would have been 100. There is no 100, so we couldn't do a conversion. So we just end up basically effectively cashing out the old 25s, which were up here. So these just ended up getting cashed out for us, and instead of it going forward. So we now have naked long. So that brings the point up of what are we going to do here? We have a nice gain. Obviously, it's nothing in the grand scheme of things, but it is a nice gain. So we don't want to lose this gain, even though obviously it could get much worse. But what we want to do is, while you can get the good money for this, you want to see if you can possibly cover that with another hedge. So now we're going to go to 2021, and I'm going to say, well, what? These are the old ones. These are the new ones, the ones that don't have the yellow. So what can we do now with our 25 times 16 bucks is what? 2,500 times 16 is $40,000. So what can we do with that $40,000 rather than leave it all on the table in the $32 calls, which are over here? And what I think we want to look at is maybe SQQ is now at 42. So we could pick up, see, the 40s are 14, but the 35s are barely over 15. So certainly we want to stick in the 35s. So we want to pick up like the 35s, and the 30s are only 17. So I guess the question is what spread would we like to get instead? So we can go with these in the monies. If we can get these for 17, I'm not sure we can. But let's say realistically, we can definitely do the 35s for 15.50. And then for 13, we could sell the 44s. That's not a very far distance though, so I'm not happy with that. 1150, 4950. So 50s are going to be at least 1150. So I would say, what about next year? What do we got? This January 50s are 7. No. September's are 450. No. I think, let's see, we have 40,000. And this spread, if we say the 45s, I'm not that happy with what the spreads are, but we could substitute in 50 spreads. So the question is, do we want to do that? I know what to do. All right. Since we don't really need to be in 2021, what we're going to do is we're going to cash the $32 calls to 1640. Okay, so we're going to cash those out and pick up $40,000. And now for a new hedge, we're going to go to 2020. We don't need to be that far out. So for a new hedge, which will have a more immediate reward for us, we can pick up the 35s, which are 1150, and the 50s are $7. So that's good. That's 450. So if we pick up 50 of those at 450, that's 50 times 450 is 22.5. So we're taking almost half our money off the table. We're taking 20,000 off the table, but still leaving ourselves with a very nice hedge. All right, so that's what you want to do. That, and that's, by the way, that's why the short-term portfolio makes so much money, because when we do have a nice gain in a hedge, we take it off the table and we put on a new hedge that will still make money if the market keeps going down. But we're taking that first. The first thing is profit. Take it off the table. It's good money. All right. So what do we say? The 35s for 1150, and the selling the 50s for 7. So that's going to be official. Let's get into chat and make sure we got everybody on the same page. And wow, no, stupid. There we are. Now go to the end. Okay. We are cashing the OOP $32 201.32 calls for 1640. And we are buying 50 of the 2021 $35/50 will call spreads for 450, $22,500. Okay, so what I gotta do now is 1640 times 25, $41,000. Whoops, $41,000. Okay, so in other words, we will make more money in between, because now we have 50 instead of 25 units, and it's at 35 and these are at 32. So it's not like we're changing much. We're basically just covering. Now that we had a nice run up on something that was uncovered. So, and we'll probably do another one, but I'll do them one at a time. So bold and blue and send it. Okay, so that's now an official trade. Now, what else do we have under the same thing? This is the OOP. Now, TZA, same thing, because again, the cover was too high and we couldn't do anything with it, but that's okay. So I imagine TZA must be in the same position, basically. In TZA, we have the 8s, and the 8s are now Oh no, because TZA didn't do the split, so it's a different situation. So TZA is really where we had it in the first place. There's no need to change that, and it's a 2020. Oh no 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 no! Oh shoot! Edit. It's a 2020 35.50 gold call spread. Sorry, that was 2020 on the new spread. So we don't have that situation with TZA because TZA is already January, so it's going to react the way we want it to. So of our two spreads, we just took $20,000 off the table out of our two spreads. Our two spreads originally cost us 26,000 plus. Well, I don't want to say we took 21. Yeah, we did. Okay, so they originally cost us $55,000, and we took $20,000 off the table. So now we've cut basically in half the cost of our spreads while still giving ourselves the same kind of coverage. And that's what you want to do. You know, you have to take advantage of these dips and figure out a way to extract some money. Otherwise, what's the point of what you're doing? So here we are at 155% of the portfolio. Last time we did a review, it was. This is not actually our last review. This is the April review summary. I never did a main review summary. What was that? The OOP? Then we'll look at the STP also. So in the OOP was 283. So we've actually dropped from 283 to 255. And we certainly, I don't think we've really improved our buying power either. So we have some work to do, I think, on the next review. Well, now that we spent some money, yeah, our buying power, cash on hand is no different. So we went from 300,000 here to 255 here. So we're down $45,000 sticking on the portfolio. And again, we knew this was going to happen. We knew this would happen when the market pulled back. It was going to be a little bit ugly. And we're down 20% in our portfolio, basically. So unfortunately, that's just the way it's playing out at the moment. It's not any particular thing to blame. I mean, we have some ones that are getting hammered, like KHC is getting hammered, Intel's getting hammered. So we certainly have some positions that are getting hit pretty hard. You know, but as I said in April, I said, look, we should cash these things out. Because there was no way to protect them because they had run so ridiculously high, the cost of really fully protecting them was going to be ridiculous. So instead, what we did is we're giving up the April gains, and we're going back to where we were in March before the stupidness set in the first place. I forget what it says. Okay, yeah, in March we were at 283, and then we shot up to 300, and it just, you know, it just was definitely silly. And I said it's carefully for places to take money off the table, so we really don't trust this rally. And you know, we'll see. But we are going to need even more hedges than what we just added, because we didn't really add that much if this thing gets worse. We're going to have to be really careful about this stuff. You know, there's nothing we don't like here, but you know, Apple took a big hit. Alaskan's okay. AXL took a hit. BBY took a hit. They're okay. CDE is still doing crappy. CHK is not doing well. Freeport, Gold is not, you know, ABX Gold is not doing good. Intel obviously getting killed lately. KHC getting killed lately. LB, even though they improved, they haven't improved enough to put us in the black yet. Macy's still in the doldrums. MJETF not really taking off yet. MU also not doing so good at the moment. Although anything semiconductor sector's got problems. SunPower is actually doing pretty good considering. Oh shoot! Hang on a second. That's my door. It's the letter. Yeah, 2:30. I'm at 2:30. She started 2:30, but it's not, you know. Okay. So where was we? Oh yeah. And UNG we just added. Wheaton, whatever. It's you know, it's going to fluctuate, and you have to just be able to accept the fact that it's going to fluctuate like this. And like I said, if you don't want to go through it, it was better to sell off because you're going to go through it. There's no way to avoid it. No matter how much hedging you do, that's going to happen. Butterflies even down, I bet. Ow, yuck. So, you know, look, part of that is being caused by the higher VIX. Let's see if we can find, where are those charts? You know, when the VIX flies up, it hurts that portfolio a lot. But that is painful. That's unusual for the butterfly to take such a big hit. Was up 65% and is now up 42%. It's very, very unusual for it to have such a big thing. And woof, because OIH is getting completely creamed. That's not good. Wow. We just added MJ, and that's taking a hit. You know, but again, it's because we have a short this and a short that, and they're getting killed. So nothing we can do but ride this stuff out, unfortunately. Wow, OIH is really getting hammered though. OIH. Yeah, it's coming back a little bit. I mean, look at that thing. So since the last thing, it went down $2, and we have quite a lot of OIH on the bullish side. So can't be happy about that one. And then we've got the LTP. Hello. 132, that took a big hit also. I think that was at 160. So you're talking about 20% is probably down about $100,000 something. We're at 1.16. More than that. Long-term portfolio, 1.4. So we are down $300,000 in long-term portfolio. And again, we didn't make many changes. We aren't touching anything. This is just a fluctuation we're getting from the market diving like this. It is not pretty at all. And a lot of the stocks that we're holding are getting hit. So the only thing we can do now is to ride it out. I mean, there's no magic bullets for these things at this point. We decided to, by not cashing out the portfolios, this is what we exposed ourselves to. And this is why I didn't want to cash out the portfolios. Now, Money Talk, we had pretty well hedged, but it's still down to $112,000. And Money Talk was, Money Talk, it was at 155. It was 127, so now it's 112. So it lost $15,000, and that's actually 30% of that portfolio. So it's only a $50,000 portfolio, so that's a 30% change. Oh wait, am I doing that wrong? No, I'm doing that wrong. Silly me. It was at 155. Now it's up 112. No, that's 40. Yes, it was 20%. 20% down on the portfolio. And again, it's the same thing. The hedges haven't kicked in yet. You know, you have this one's covered. This one, we only have 5 SQQs now. And why are they not up? That doesn't make any sense. 40s. See, we didn't. That's not right. That's what's wrong with this portfolio. We can't have 540s because that would have meant that we had 20 10s. Is that what we had last time? Oh, wait, I can see right here. SQQ, we had 20 of the 10s. Oh. Okay, well, that's what happened then. So now we have 5 of the 40s because of the split. That's just a useless hedge right now. All right, we're not going to. I can't change that because it's a money swap portfolio. So even though it should be changed, I can't change it. SQQ really messed us up with that change. And the last one was, what didn't we look at yet? The short-term portfolio. Hopefully, some good news here. Oh yeah. So the short-term portfolio is up $100,000. It's up at like 781. It's almost $800,000 now. And that, of course, is the hedges kicking in. We're in a similar situation here. We do have 48. We do have the short 48s in 2020. So if we cash that, what would we do? Because we just took the 35-50 spreads. These would count for that. See, the problem is that it's not going to save us much money because if we cash these and then move into 200 of the 35-50s, right? We'd have to do 200 and only sell 150 because that would mean to maintain the coverage. These are already sold. So if we did that 150 times whatever those 35s were, which would be right here. Oh no, I didn't get the specific prices on there. So the 2020 35s are 1150. All right. Bear with me. So if 200 times 1150, $230,000. Holy crap. Okay. And the other ones are 7, right? So it's minus, and then so 150 times 700, 105. And what I see, the other one was 230 minus 230,000, 25,000. Seems wrong, doesn't it? I need more screens. We already have 100. We take 100. Oh yeah, I'm sorry. We take 164,000 off the table. Now it makes sense. Okay, so yes, that number's okay. So we would take off one. Okay, so then that plus 164, 123, 39. So we would take 40,000 off the table. So in this case, what we'd be doing is selling these, cashing out the 32s. We would then buy 200 of the 35s and sell another. Should we sell the 48s? I don't really want to sell the 48s. Oh no, I counted selling the 50s. So we would sell the 50s, 150 of the 50s, and that way we'd have a total of 50 of 200 and 200 covered on 2 different strikes on the back end there. That's why you want to do that one. Oh, messy though, I don't like that. But again, we want to, it's still 40,000 bucks to take off the table. That's half of what the portfolio's gained on paper. So obviously we should do it. So let's see. Okay. For the STP, we're also cashing the $2021.32 calls and buying 200 of the $20.35 calls. $11.50 and selling 150 of the $20.50 calls 4.47. And that's because we already have 50 short 48. So there's no drastic changes here. We're just sort of, playing along. What is this doing? I don't have a pull down menu. That's pretty weird. Oh, wait. No, isn't that strange? More colors. Show me colors. Ooh, pretty. What kind of blue do I usually use? Kind of that blue. Maybe that. Maybe that. No, that. Let's call that. Say okay. Ha. All right. So when you're when you're in the middle of a sell-off, there are certain mechanical things you want to do. You want to say, okay, so where can I get, where can I draw some cash? Which of my SQQ or my TZA, which of my hedges are deeply in the money? Oh, here's another one deeply in the money. The TNA puts are now deeply in the money, but not so much that I think I want to cash these. But as you can see, also they're up 50%. And we could flip this into something else, but it's not a big enough deal that that's what we want to do right now. Okay, that was an extra hedge that we put on there. That if it works out, it's going to pay 30 times 40 is $120,000, and it's only netting 50,000 right now. So it's still 70,000 more protection. Should the thing go down, it's nicely ahead by $18,000 ahead of where we bought it. So even if it goes back to neutral, it's not so bad, and we can adjust it then. I don't really want to change it because if it does, the market does keep going down, that's a nice $70,000 we don't want to give up on. So we'll see what happens. And I'm not super bearish because nothing new happened. All that happened is China is now threatening the same threat they made a week ago, but basically they're threatening to stop sending us rare earth materials. Not in an oblique manner. They just sort of hinting at they're reminding us that they control them. And apparently Trump didn't take the hint last week, so they're now re-reminding us this week that they control it because one of the ministers said something. And that's the way they work. The next week they'll say something else, and the next week they'll say something else. And at a certain point, if you don't get their warnings, they will then suddenly say, oh, you know what, we had a little meeting, we decided to stop sending you rare earth materials, and all of a sudden your economy collapses. That would take months to do, and it would certainly be after another negotiation falls apart. I don't think they would do it without at least sitting down at the table and trying to work something out, even if they don't think that there's any point, which frankly, I don't think there's any point. I mean, you can't talk to these idiots in this administration. So we'll see what happens. But it's all, so in other words, the bottom line is we had a huge drop on nothing particularly new, all the way down to Dow 25,000. And that means you just got to start looking at your charts. As much as I don't like TA, it's still, you have to see where people were trading something. And you look down here and you say, well, gosh, that's low, right? We haven't been this low in 3 months. Here we're testing the 3-month low. Here we're at another support, but the support over here, right? And then here we're back at the back of the 3-month low, and 15,000 also you would think would be bouncy. Like I said, 25,000 was bouncy. We actually played that. And that's why I like that one best, because 25 is the strongest support. But 15, above 15 on the Russell, I would play that with a tight stop below 15. 28, obviously on the S&P, if we get back over 28, that's something you can play bullishly. But you can see on these charts pretty clearly, like, okay, there's got to be some support here, even if it's just a weak bounce. But now, and then that's what you want to do. Then you want to say, okay, now let's measure the support and see if it's effective. So, taking the S&P, for example, you're falling from 2850 to 2,800. Your premise is that this is an overreaction and that this should have been your support. So you don't measure down to here, you measure from here and assume that's an overshoot. So let me see if that's true. And the way the 5% rule works is you take that number, which is 150 points, and then you take 20% of that move is 30 points, obviously. So that means that you're looking for 30-point bounces. So 2830 would be one line. You can see some consolidation over there. 2830 and 2860 should also be significant, and it certainly is significant. Okay, so wait a minute, 2850. I'm sorry, I'm extremely wrong. What was I looking at before? 2950. That's why we zoomed in too close. We lost the bigger picture. We fell from up here. So I'm sorry. So from 2950, so the numbers are right. It's 100 points. It just doesn't look right when you look at the hourly chart. So we fell from 2950 to 2800, and then you're saying that you're working in 30. So you have to imagine it's up here. So they're 30-point increments. Now that means that below 2,800, you're looking for a 30-point overshoot also. As much as you look for the bounce, you look for the overshoot. It's not usual that you have a double overshoot, but it's very often that you'll overshoot by whatever the weak bounce is. The same 20% is going to be your overshoot. And here it is exactly the 20% overshoot. So you can see basically the 5% rule is kicking in and working. So it worked pretty much on the dot. And the reason the 5% rule is so accurate is because we're just predicting the mechanics of the trading program. So we're predicting what computers are going to do. Computers are very exact. When you hit 2770, those programs start turning off. And of course, it's not 100% program, so you get still some panic. But what happens is the machines start turning on and buying from the humans at this point, and that's the end of it. And then once they start buying, you're good. So then you're going to get at least your weak bounce, and your weak bounce in this case, well, this is all overshoot, so we expect to get back to 28. If 28 fails, that's a very bad sign. You really want to see 2830 as your weak bounce, and then 2860 is your strong bounce. So even on this closed zoom, even when you zoom to this level from here, you see. Then that's what makes it so fascinating, right? Because you see right at 2830, look at that consolidation that's predicted by the 5% rule. Then you go to 2860, look at that consolidation predicted by the 5% rule, all along that line. So that means that obviously the 5% rule seems to be working in this zone. And even here, you went up to 29, well, probably a little bit higher, but you got up to 2860 in this zone. I think you can see that here, right? So we went to 2860 and a bit over, but not for very long. See, these things look like more than they are, but all that is 2 days above, and here you are. Here's what your 2 days above the zone looks like. Otherwise, so we stayed pretty much at that 2860. So what you have here is a strong bounce line, ultimately failing. Then you go back to test 2830. Come back to the weak bounce line, fail the weak bounce line, and now you're back to your baseline. But a panic and you're going through it. Now, this looks more like you're consolidating for a move down if you go to the bigger picture. Looks more like you've been consolidating for a move lower than higher. And what's the next group below that? Well, now it's going to be 150 points down from here to 2650. And you can see some for what the bottom formed over here at 2650. But that's our next target. If we can't get back over 2800 and start moving up from there, then you're looking at a move to 2650, and that means we need more hedges. So if we're not there until the weekend, we're going to have to add more hedges to what we have. Because you're talking about another 5% drop. That's another 5% drop, and then the next one is next stop is 25, and the next stop below that is 2350. Which is back to the lows over here, 20% drop. But we are very, very much obeying the rules of we're very much obeying the 5% rules and what it's predicting. Questions? Nobody has any questions. I must be so fascinating. I got to listen to myself one day. Nobody wants to ask a question. I don't get that. All right. Anywho, oh, that drives me nuts. Anything I look up over there, and that's because it has this one. It's a connecting thingy, right? Red, yellow. I don't know how to make it not do that. Unlink. Oh, there you go. There you go. That's pretty weird. So anything I type over there goes on my chart over here. It's kind of a cool feature. So in other words, every time, see how that's a one? Every time I type something here, if the other thingy is linked here as a one, it automatically puts it there. It's actually brilliant. For certain kinds, if you're a day trader, it's actually a brilliant thing to have. Ooh, how's gasoline doing? Very nice. Look at that. We're going to be making some money already. Look at that, 350 bucks. All right. Hey, who loves these webinars? All right. So now, obviously, that's going to be our stop line. Because when you make 350 bucks like that, that's kind of a gift. And what are we doing? It's like 45 minutes. So that's nice, easy money. So we take that off the table, and so you don't sit there and let it go away. So if this green line is holding, which is 192 basically. Wait, what? Oh, I see. I'm sorry. So it's not 192. It's 190. You gotta be exact. It's 190, 180. Anyway, see, 350 is fading out. So I'm not gonna sit there and screw around with that. Let's see what happens. I want to see it's over 192 before I would relax on this. But no, see, I'm gonna. See, there it goes. That pissed me off. Oh, you bastard. Guys, what are you selling because I'm talking about it? Oh, forget it. Look at that. Oh, come on. Really? Is this you guys selling? Because that's not nice. And don't sell like that. Don't keep accepting the lower offers. Wow, look at that. So like I said, 375 is really good money and you should take it. You have to realize when you've made a lot of money, because you're hitting this resistance, you're bound to pull back, or even if you're going to keep going up, you're probably going to pull back a little bit from that spot. So now I have to think, what do we want to do? Because I do want to be long into the reports tomorrow. Is tomorrow Thursday? Yeah, tomorrow's Thursday. So there's tonight there should be an API report, and tomorrow there'll be a report. And I would like to be long, but I don't want to blow this really nice gain that we got so quickly. So I think officially I should do the right thing and take it off the table because you don't know what the report's going to do. So there we go. So up 320. I'm very pissed off about the 50 bucks. So what we're going to hope now is that the API report doesn't show a big build or that gasoline pulls back more than it has at this point, so I can get back in. If not, though, I wouldn't mind taking it again at 192 with very tight stop flow. So in other words, once we're over this green line, then we could use that green line for a stop and risk very little on a new entry. But basically, if we can get back to 191, I wouldn't mind picking it up again over there. Let's see if anything else looks exciting now. Now that we made you guys 300 bucks in 1 hour, we'll see what we can do about the rest. And that's not even counting the Dow, because the Dow is for, in PSW, it's, actually this is only for the PSW guys anyway. So in PSW, we did this one already for 500 bucks. So that's 800 bucks technically in the seminar. Let's see. Now there's nothing there. Natural gas is already played out. And again, see, when you're over the second resistance line, take the frickin' money, for God's sakes. Wow, that's nasty. Brent is, look at that. Brent has really collapsed, and oil hasn't. So probably Brent's a good play to go north at this point. So 68 on Brent is probably a good long. Silver is still where it is. Apple still where it is. Dollar is still really strong. Gold is still okay. No, nothing exciting here. So we'll see what happens to oil over the course of the seminar. But what about OIH for a new trade at this level? Yeah, I think it's really weird to me because OIH, well, let's see who's in it. Let's really look at them and think about what we're doing here. Because OIH, it's oil services, and in theory, there should be a lot of infrastructure going on right now because of everything's happening. You got Schlumberger is 20% of it, Halliburton. So 35% of it is Schlumberger and Halliburton, who are pure. They don't make oil, they don't produce oil. They build the wells for other people. Then you've got Technet, Pemmican, Patterson UTI, Baker Hughes, another one that's a pure. They sell all the wells and such. So none of these guys are. It's pure. It's not. It's not all crapped up with like oil companies or anything like that. These are the guys who provide the services for the oil companies, and the oil companies haven't spent very much money in the last few years in exploration and production. And you can't go. Wells only have a service life generally for about 3 years when you drill a well. So it's weird that they aren't putting money into more exploration and production, unless they think that like we're going to stop using oil a lot faster than I thought. But it does seem kind of inevitable that they should at some point begin going back to exploring. But these are incredible collapses. Now you got to obviously we're going to look at Schlumberger. So then, so when you start questioning ETF, you got to say, well, so Schlumberger is back at a low here, and a very, very big multi-year low here. Okay, ridiculously low, and keep that in mind. We're going to go somewhere else in a minute. And again, I wish I had more screens, but I don't. Hey, by the way, it's been suggested to me that we do a seminar at sea. Is anybody interested in that? We do one on a boat, because we'd have rooms and stuff, and we'd be able to do events and all kinds of stuff. It's kind of fun, I guess. But the question would be getting everybody together on one boat. Let's see. Okay, so and Halliburton also to very, very low. So now we know two of the biggest components. They're 1/3 of the entire index, Schlumberger and Halliburton. They're both at multi-year lows, and now we have to say, is that fair? So there's the steel tariffs and all kinds of stuff that's probably messing up. Doing business in foreign countries is probably a problem now. That's not the right place. SLB again, we'll try. Schlumberger. Wow. Okay, so in good times, 40 something billion dollars of business, 6 billion, 5 billion in profits. Last year, 2 billion profits, 32 billion sales. Next year, 2 billion. Nobody's expecting much out of them, but so let's say 2 to 3 billion range in profits moving forward. You're buying the company for $50 billion. It's not a bargain. Okay, they have the potential to make incredible amounts of money, but there's nobody seems to be in a hurry to get their services. They're not ramping back up quickly, and there's nothing there. So unfortunately, no. Halliburton. And this is it. If Halliburton doesn't look like a bargain, then there's really no point. Halliburton. In their good times, 30 billion in sales, 3 billion in profit is being generous because they seem to be able to. It barely made it to 3 billion. You're paying 20 billion for the company now. They're a better deal than Schlumberger because they're still making 1.6, 1.7 billion. But look, this year they're estimated to go down to 1.2, and next year maybe back to 2. So it's not a no-brainer. That's the bottom line. So what's that OIH position in the, is it in the short-term portfolio? No. It's in the options opportunity portfolio. It's in the butterfly portfolio. I know that. So what do we have here? In the butterfly portfolio, we sold a bunch of puts and we're getting killed on those. And we have the calls, which we're getting killed on too, for that matter. We have the $15 calls of 2021 in OIH. And they're at $13.50 now. And we just looked at the two biggest components and we said, well, you know what? They're not going to have, I don't see a huge giant recovery coming. So you have this ETF that has a basket of companies. The biggest two companies in the ETF are not likely to explode higher. And so this is probably not too unfair of a price. So if you're going to play it from scratch, I'd want to establish a long-term position with an eye towards selling calls, which was originally what we were doing in Butterfly. And they don't have very good low options. But let's say you took the 10s, which are 4. Oh no, I wouldn't do that. I'd take the 12s because I'm not going to pay an extra $1.20 to be in the 10s. So for $3, you can get the 12s, and you can sell the 17s for $1, and that would be net 2. So you're in the 12-17 spread for $2. Then you can sell 1/2 of the 13s to pay for that. So now you have a free spread. So let's say you did, for argument's sake, 25 of those, okay, and that would cost you net 0. Okay, your obligation, I'm sorry, you wouldn't do 25, you do 30. So you do 30 of these and 15 shorts. And that way you have nothing. You have no cost of the long position at all. And your worst case scenario is you get assigned at 13. You would get assigned to OIH. That's your worst case scenario is owning OIH for 13. And only owning 15 and 1,500 anyway. So it's not a terrible burden. Then I would look towards generating some income. June is too close, of course. And I would sell 10, let's say, of the July, you can't sell the 13s. I'd sell 10 of the July 14s. And I know it sounds like peanuts, but don't forget you didn't pay anything for your longs. So you're selling a 1/3 cover in July of the 14s for 58 cents. You're gonna collect $580 for 50 days out of 600 days that you have to sell. See, 597, so you have 600 days to sell. So you've got 12 sales like that of $580. And that's a 1/3 cover. So 12 times 580 doesn't work, number lock. Okay, 12 times 580 is $7,000. So you can generate $7,000. And what's your risk? Your risk is only 1,500 shares times $15, $22,500. So your risk is $22,500, and you can make about $7,000 just selling the short calls. And of course, obviously, since you have the bull call spread, which is the, what do we say we're doing, the 12-17s? So you have the 12-17 bull call spread. If it does get up to 17, you got 30 of those for another $15,000 in profit. So you could generate something $21,000, $22,000 in profit against your risk of owning Schlumberger at 13. So that's the way I would play that. It's a conservative play where you're not even relying on 13 to hold, but other than that, you don't give a crap because you're really looking to make your $7,000 selling puts and calls. Now, if you have an IRA kind of margin and it's going to hold 22,500, that's not a great return over 18 months. But if you have a normal, if you have a normal account or a portfolio margin account, then this is not going to be harmful at all because it'll be a sell single 15 of these guys. Whoops. But 15 of these guys for $2. Margin requirement is $3,000. So you're going to make $7,000 on $3,000. It's very, very efficient. So you're laying out 0 cash and you got the margin requirement. But that's it. And then you're all you're doing is relying on saying, I'm going to sell 1/3 of what I've got covered every 50 days, basically. Every other month, you're going to sell that. And you're going to pick up, and you sell about $1 out of the money and pick up 500 here, 600 there, whatever. Maybe it'll do a little bit better. Maybe you'll pick up more, maybe you'll get 1,000 down the road, but you don't count on that. You count on what you can see in front of you. And so that's the way I play it. And that's why I do like Schlumberger. And frankly, that's the retreat we have in the butterfly portfolio. But we're really thinking it would bounce. But now I'm starting to think maybe we're going to have to capitulate and just play it as it is. So, going back to here in the butterfly, we have the 15s. We would sell, these are $1.50. We would roll down to the 12s, sell the other calls, and then start selling some short calls to work this money off. So let's say we sell 50 of the, what were we selling? Dun, 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 dun. Okay, we sell 50 of the 17s for $1. We roll our 15s down to the 12, so those are 3, and these are 150. Actually, it's going to cost us money. It's going to cost us 150 to roll those down, so it's going to cost us net 50 cents. $2,500 is how much it's going to cost us. Not happy with that. So it's going to cost us $2,500. That puts us in the spread, and then we're in 50 of the 12-17 spreads for 20150 minus 6,800 minus 4,750 minus the 5,000 new that we're going to sell. All right, so that's 3,600 plus 7,500 for the roll. Did I get that right? Yeah, 7,500 for the roll. That's $3 to the roll. So plus 7,500. So we'll be in for a total of $11,100, and we have a $25,000 maximum gain at 17. And sales-wise, we would sell maybe 15, 1/3, same thing, maybe 20. I would start with 15 though, because I really think it's still too low. So we'd start with like 15, and we'd collect $1,500. But $1,500 times how many sales do we say? It's 12 sales is 18,000. So we're still going to get our money back. So as bad as this looks, and that's a funny thing, you have to realize that about your portfolios, because this portfolio is showing us a $20,000 loss, but we're going to be able to turn this thing completely around and probably make $7,000 to $10,000. So this trade, as it stands right now, with a very few adjustments that we're going to make, is going to be back on track to be a moneymaker. And that's the key. You've got to always be looking at your trades and saying, how can I improve this trade, and what am I doing? Now, we let this trade run down quite a bit. All right, and at this point, though, we're going to have to just capitulate and go into that more secure trade. Also, by the way, we sold the 17 puts and the 24 puts, so we have a lot of shit to deal with here. All right, we're going to, these will have to roll down to 2 times the lower puts. 17 puts here. We got a lot of crap to deal with. We're going to really hope for that 17 target. Probably we'll roll all these down to the 17 puts and just leave the 17 puts and just hope OIH does. Frankly, OIH does better than we think, because we don't really believe we're going to get to 17. But anything close will at least get us in the ballpark, so we can roll to the 2022s at a lower strike and hopefully eventually get it right. But looking at Schlumberger and looking at Halliburton, there's no real indication that we're going to have an immediate, and then by immediate, I mean even in the next 2 years, we're not going to have a real fast turnaround. So it's time to stop wishing that we would make our money back and start getting our money back by selling calls like we're supposed to do. And that's what you got to do. You have to always be evaluating every trade in your portfolio as if it's brand new. And you have to look at how you can fix it and whether or not it's worth fixing. So that's the key to that. Let's see. Now, Rob said, if not OIH, OIH has nothing to do with gasoline. If you oil, you're saying what's good? He's saying, Rob is saying, if not OIH, what would be a good non-futures way to play an increase in oil or gasoline? Well, there's USO for oil and there's UGA for gasoline. Those are both good ways to play. So Rob says the cruise would be fun. He's the only one so far saying a cruise would be fun. If you guys would like to go on a cruise, let me know and I will come up with a really cool cruise. Because I was just talking about it and it seems like something that we could pull off where we would get section, we'll get a bunch of really good cabins on a boat. We'll have meeting rooms and things that we can go to. So, you're still taking the cruise and you still get all the food and all the other stuff that you get on a cruise, but during the days at sea, not wasting your time when there's a port to go see, but for the days at sea, we will go and have a couple of, and have some seminars. So it gives us some like extra activities. I think it's a kind of good idea. Because we could do Vegas again, but I mean we've done Vegas a lot, so I kind of think as a change of pace, it'd be fun. So I meant to propose that in chat and see who's interested, but we'll start it off here and see how many bites we get. So let's see what else is going on now. The Dow's still down, S&P is still down. See if any news has actually changed. Not much going on though. It's really kind of boring. KKR. Twitter live video hosting. What's that mean? Live video function. That's interesting. Citigroup sees trading revenue down to date. Maybe this guy should stop messing around with a little trading. Nope, nothing. Nothing is happening. There's no reason for the markets to change. Nobody said anything important. It's really weird, actually. How are we doing on the gasoline? See? Good. So gasoline is coming back down. So now I feel very good about my exit. And again, you've got to take those non-greedy exits. You've got to realize, like, oh my God, I just made $300 in 1 hour, not even an hour, trading the gasoline contract. If you don't usually get paid $300 an hour, take $300 an hour off the table. The good rule of thumb, okay? If it drastically exceeds your salary, take the money. That's what you're doing. You're working. It's a job. Make the money. It's like going to your employer on Friday and being like, "No, I don't want a paycheck." Like that's what you worked for. That was the whole point, was to get the paycheck. If you don't get paid unless you cash it in. All right. So now we're at 915. And again, I didn't have any particular reason I thought it was going to go down, other than I said, if it can't hold this line, once it popped over, if it's going to go higher, this should start acting as support. If it's not going to go higher, it fails through. Once it fell through, I lost confidence and I got out as soon as I could. I had a feeling when it was up here, I was like, it's not really, it's a little bit too high. It went too far too fast. You want to see something build up nicely. This is kind of crazy. But we'll keep an eye on 58.50 and see if that holds on oil. And if that starts going up, then we can get back in on the gasoline game. But there's no particular reason for it. And that's, again, there's a very big difference. You guys see me, I sometimes trade with conviction and I say I'm staying with it pretty much no matter what happens, because I have, I believe something is there for a reason. I believe that it's going to go up. Then other times though, I'm going to trade very, very quickly in and out, take $200 and be thrilled, whatever. You've got to know the difference and you have to play differently. Excuse me, it's a different, okay, breathe first. Okay, different style of playing. And you have to recognize in yourself, you have to get yourself in that mindset that you can't play like a long-term trader when you're day trading. It's a different thing. Now, on the other hand, sometimes I'll go into a contract specifically saying I'm going to go in this thing like natural gas. My fallback on natural gas, not that we didn't play natural gas this way, but we played natural gas off of this line. And every time it hit this line, we played it. And every time it went up here, we took the money. So play, money, play, money, play. No good, but we stuck with it. Play, money. Then we got a big payoff. And now we're out again. And we're waiting for hopefully a pullback again. I'd rather make money 3 times here than hold out for 295, which never came. I made more money than if you just held it to 295 and you'd still be waiting for the 295. We have the cash in our pocket. You gotta have that discipline, otherwise don't even start. If you can't learn to take the money off the table, do not play the game. But again, so I go back, I read the news, nothing's going on, there's nothing exciting, there's no changes, there's nothing going on with the dollar. So it's not good, it's just simply not a good time to play. I wish it was, and it's unfortunate when you're trying to do a seminar and show people some trades. But again, I don't feel bad because we had a nice gasoline trade. So if all we do today is make $300, I'm happy. All right, Robin says, Dear Phil, I do not understand hedging. If I have a 2020 TZA 717 call spread and the market drops suddenly, how do I take advantage of that? When do you have long calls and when do you have spread? Thanks, Robin. Okay, we rarely have long calls because the spread is really there to protect your long-term positions. And basically, if the market comes back, you didn't need the hedge. If the market never comes back, then the hedge will eventually pay you off in full. So it's really there for if the market goes down and stays down. But when it comes down like it did today, not that today is really drastic, but when it comes down today and we made $60,000, 60% on our QQQs, whatever the amount is, doesn't matter. But we made 60% on our QQQ longs. All right, even if it was covered, what we could have done is cashed in, like you're saying, the 717 spread. If you cash in your sevens because you have a run, like let's say you get to 17 right now on TZA, we're not there, we're only at like 12 or something, right? Now we have to get the number, but we're at some not very exciting number on TZA. Oh, it's not even in this portfolio. Well, no, we're at 10 or 11, right? 1050. All right, anyway. But let's say you have a run to 12 and you want to take that off the table. And obviously this spread would have moved barely, not at all. But you can take 5+ off the table on your sevens. You cash your sevens, you leave the 17s, and then you cover the 17s with, let's say, a 20-21, 15-25 bull call spread. All right. So for example, it won't really work. Well, let's change the premise. So let's say that's your actual spread and you want to take it off the table. So TZA, you've got the 20-27s. All right, they're almost $4. They're $3.75, let's say. So you cash those for $3.75, and now you've got the short 17s, which are $75.80, and you don't want to pay that money to get them back. But instead, we're going to take, we're going to go to 2021, and we're going to pick up the 15s, which are $2, and we're going to sell the 25s, which are $1. Well, they wouldn't be that; they'd be like $1.20. So actually, that's really good. So 15 is $2, and these are $1.20. So you're only spending not even $1 for the new spread. So you're taking almost $4 off the table on the sevens. You're taking, I'm sorry, these sevens. Yeah, you're taking $3.75 off the table here, and you're going to spend $1 or maybe $2 because you'll do double to cover the short 17s. So since you have the, what do we say up here? Oh, I'm sorry, we were talking about the 15s, but we're nowhere near 15. Yeah, because you're just covering the 17s. So I'm saying you would take it, you would take off. In this case, I would only do a 1x, but you'd be basically, you can cash in this hedge by doing that. Now, Of course, technically, you have then naked short 17s. And if you have naked short 17s and you sell, correct, you are going to have margin of, well, 3,200 for 10 contracts. So you'll have that margin to contend with because, you know, your system, unless you have a portfolio margin account that'll take your hedge into account, it's going to basically count that as you're using that much margin. So you will be tying up that margin for a long period of time because you've cashed in the money. But of course, on the other hand, you've got the money in your pocket. So you're net neutral really on the margin because you cashed out and took the money. And I hope that was clear because there was a lot of stuff to talk about in one question. So if it wasn't clear, you know, feel free to tell me that. But that's, you know, the main way we do take a hedge off the table is to do something like that. That would be our move, basically, if we feel it's run its course. Now, again, we just did that with SQQQ. I don't feel SQQ has run its course, but we do have a profit, and like I said, that reduces the cost basis of our spreads by half. So taking that off the table now gives us a nice profit, and of course I fully intend to add more hedges if the market keeps going lower, if 2,800 isn't taken back on the S&P, which it sure as hell doesn't look like it's going to be right now. And we got a lot more hedging to do before this week is over, and there's only 2 days left in this week because it's a short week. Oh, by the way, speaking of cruises, I'm going to Cuba on Saturday. So I've never been to Cuba before. It's just a short, like a 4-day trip, but I'll be Monday. I'm going to be, I think, almost entirely off the ship. So I think I'll put a post up Monday morning, but I won't be around at all because I'll be probably driving around Cuba and checking the place out. Tuesday, I'll be working from the ship. Wednesday, I'll be back, but at some point in the morning, I got to get from the ship back to my house. So, but I had an opportunity to go to Cuba with some friends, and I'm gonna go and do that. So that seems like a really fun thing to do. I'm just dying to see Cuba. So it's one of the few places in this hemisphere I've not gone to. So it's cool for me to see a new thing like that. And I'm very interested in what's going on over there and how people are going. And I'm also worried they're going to shut it down. That's the other thing that it's like I'm worried that Trump isn't really excited about the fact that he now has relations with Cuba, and he may take it away, and that would suck. So while I can, I'd like to go out there and talk to the people and see what's going on. So just so you know, hopefully the market doesn't collapse on Monday, but into the weekend, I will certainly want to add more hedges, especially if we're still down here. And then, as you can see from those charts, there's not that much support down here. You know, we don't have, nope, futures. There you go. We don't have very much support here. You go to 2,700 before you have support, that's a long way down on the S&P. That's another 2.5%. So that can get very ugly. I don't like that at all. And like we said, I think we were talking about 30-point increments, right? So 70 has got to really hold, and we're at 79 right now. So if it's an overshoot and we correct, then it has to be in the same amount of time as we went down. So you see how we went down? So if you call this an overshoot that we're going to correct from, then tomorrow, no less than tomorrow, we have to be back over 2,800, and the next day we have to, and on Friday we have to be back up here at 2,830. And if we're not, then this is going to be, then you're very likely to see the next leg down over the weekend, and that means though that we can pick up some nice short-term aggressive hedges. And and again, another reason that we're taking this money off the table while we can, because if we just took 40,000, 20,000 in profit off the table, that's money we can now put into an aggressive hedge. And you know, for TZA, for example, you know, look, what's the purpose of this hedge? We're worried the market's going to collapse. When are we worried the market's going to collapse? In less than 50 days. Right now, we think it's going to collapse right now, another 5%. What's 5% going to do? 15% added to here. What's 15% here? $1.50. So we're going to be at $11, $12. So what can I do? What do I do at 12 bucks? What kind of trade can I make for that? Probably the most bang for our buck is going to be, let's see, 120, and that's 60. That's no good. This one is 85 minus 40 is 45 cents to make $2. These are not even good hedges. So now let's go look at SQQ. Hopefully they're a little bit better. So these prices on TZA suck. So now we have the new SQQs. Now, at least this will move because it's going to go from 42 to 50. If you're going to have a 5% drop, will give you a 15% bump here. You're going to end up at about 50. 50 looks exciting. So where can we make our money here? Well, we're at 42 now. The 50s pay 260. No, they don't pay 260. They were 260. The 50s are now 230 something, 235, 230, let's say. And we, oh, but look at this. So this is wonderful. We can get the 43s for 450. All right, so I'm sorry, the 42s. So the 42.50 spread, which is an $8 spread, we can get that for like $2.20 or $2.20, $2.30. So that's worth it. So that's way better than taking on a Russell spread. So most likely we'll go with something like that. And I'm very fearless about those kind of spreads because if we take 100 of those or whatever, what we're going to do is if it works out, it's going to work out and we're going to be deeply in the money and we'll take it off the table, whatever. If it doesn't work out, then we're going to salvage this money and we'll roll it out to a longer period of time and set up a longer spread. And we're going to let the short 50s wither and die against our longer spread, of which we have more than one because we have the other SQQs as well. So we're going to just beef up the longs. And that's how we always work into these things. We work in, we work out, we work in, we work out. And by the way, let's not forget that SQQ position was huge because we used to have 400 of the longs, but because of the reverse split, we only have 100. But 100 is what the old 400 used to be. We didn't lose any money, nothing really changed. It's just the way they number it is different. And we'll see what happens. But we're very happy from here to build into more. All right, oh, hour and a half, okay. So if there's no other questions, I'm gonna wrap this up shortly. There's really not much going on, but don't worry about it. Active trader. Okay, everything looks normal. Gas is back over 192. And like I said, I would play it maybe up from 192 if I felt like oil was popping back up, and oil is popping back up. You got to watch it closely overnight, and you have the API report. There's going to be a risk, but I think I'll take it. Let's see. So now I'm just back in the contract that we just got out of, and we're going to see what happens. But this is one I'll take into tomorrow's report because we think there's going to be a turnaround, and hopefully that turnaround is going to give us a nickel. And a nickel will be a couple of $1,000s on this contract. But if it can't hold 192, I'm going to get out with a very small loss. All right, and my biggest problem, of course, is if it goes up to 195, if it's up to 193, and I make another $300 before the market close, before the market closes and before the API report, I'm going to be in the same situation. I'm going to be like, ah, shit, I can't I can't not take the money, even though I think it's going to do better. So we'll see. At least I'm back to 350 now, so I'm happy. But I'm hoping that the API report's kind of a wild card. We don't know what's going to happen there. I'm hoping that does well. But the fact, it just seems to me that the timing, we talked about this last week, the timing of the last report, I think, was just a big negative factor that probably will be overcome on the new report, probably. But we'll find out. But I really did want to be long gasoline into this report, and now I just have to have the balls to stand by it. But a lot of, obviously, other bad stuff is going on. So There's nothing particular, no news, no nothing else. And also, how does a trade with China really affect the gas? Whether or not you're using gas next month, it doesn't. So that's another reason that you say, well, that's a little silly. It's like, why would gasoline consumption in the U.S. have changed from that? Plus, at the end of the month, you have the OPEC meeting, so we're in for that also. So there's a lot of reasons I want to be long on gasoline. I really think this 192 is just way too cheap. And and by the way, this contract, don't forget, ends. Did it end? Wait. This is 19. I think the other one ended now. RBM 19. Nope. 2 days left. Nope, still going. So RBM 19 is still the current contract. It's at 195 now. All right, it has not expired yet. Our contract RBN 19 has 30 days left. So that's still dragging us down. People who are still getting out of RBM 19, the current contract that's for June, because if they still have these contracts open, if they still have the RBM contracts open as of the close of business on, well, it says 2 days, it has to include today. So I believe it will be closing tomorrow. I don't think it closes Friday. I might be wrong, though, it might be Friday. But anyway, so close the business tomorrow or Friday, whichever day it is. Any contracts they have open, they have to accept delivery of, and if they don't, and if there's no demand for gasoline, we have too much gas in storage, they are pretty damn screwed. So they are getting out of these contracts, and the nervous people, especially ahead of inventories, want to get out, because once inventory is out, there's going to be no way for them to turn around and get out of this thing. So it's going to be a disaster. So I think that if there's a draw, though, there's going to be such a scramble for people to suddenly get gasoline and buy it, and it'll be very much to our advantage if that works out. So that's why I really want to be in gasoline. I hate to be out of it. So, meanwhile, $400. So nice profitable $80 so far. As long as oil keeps going up like that, as long as the dollar is not flying high, if the dollar falls, if the dollar isn't going up too high, it stays down around here below 98.10, I think we're okay. It's that the strong dollar has been hurting gasoline and oil all day long. Look at that, from 97.78 to 98.10 is almost 0.5%. So it had a pretty big move, and that's following through from yesterday, where it's clearly up 0.5 point from yesterday. So, I want to hang on to these reports. I am excited about it. I think it's going to work out. We just made another $100, so nothing to complain about, but it's all going to come up to what these reports are or what they show us. And so we'll talk about that when we get back to the chat room. All right, so last few questions, we're going to wrap this thing up, and I don't see any. No questions. On PSW, no questions. Wait, but what do we cashing and buying which ticker? Oh dear. Oh, I see, because I didn't write SQQQ. Okay, I gotta get back and take care of that also. All right, guys. Well, thanks for coming, and we will get back to work in the regular chat room. We'll do this again next week. All right. Oh, wait. Will we do it again next week? I believe we will. As far as I know, wait. Saturday, I'm on the boat. I think I come back Wednesday. Yeah. Saturday, I'm on the boat. Sunday, I'm in Key West. Monday, I'm in Cuba. Tuesday, we're still in Cuba. We leave Cuba in the afternoon. And that means that then we have to get back on the boat. And then Wednesday morning is the day I'm back. So there will be no webinar on Wednesday. That's just going to be too heavy of a day next week. So there won't be a webinar next week. And Wednesday morning is the morning that I will have a post up, and then I won't be there. Maybe I'll be back about 10, 11 o'clock. We'll see what happens. All right, that's the plan for next week. All right. Anyway, have a lovely, lovely day, and we will see what happens. Hopefully the market does, hopefully it doesn't collapse, but it looks like it's still really falling apart. Not good. Yeah, see, that was a weak, and that, see, this is why we have weak bounces that we check, because when you have a weak bounce and it fails, you know that you shouldn't be buying, right? That's when you stay away from the market. Oh, and by the way, the weakness here makes me more inclined to take the gasoline off the table, because if these things are choking out into the close, they can drag everything else with it, regardless of whether it deserves it or not. So keep that in mind too, and I'll tell you guys if I get out of this thing or what's going on. And we'll see what happens with the API tonight also. All right, so thanks everybody for coming, and I'll see you all. I'll talk to you next week during the chat room. All right, thanks, bye.